Hello and welcome to ATFX's Bank of Japan preview. Well, where can we start this week in financial markets? As expected, we can't talk about the Bank of Japan or indeed anything that's going on with financial markets at the moment without looking at what's been happening in the States. And not surprisingly, Donald Trump's inauguration and the new government coming in has led to quite a bit of volatility in the market and some interesting moves. So that's something we're going to have to take into consideration. But for yen traders, it really is going to be a very important day on Friday when we hear from the Bank of Japan. Now, the market is now pricing in an 80% chance that we do get that rate hike that we've been looking for from the Bank of Japan for quite a while. And if we look at yen levels as well, it's probably quite well justified. So the Japanese authorities have been concerned with a number of things, an increase in inflation. And of course, this is one of the opposites that we're seeing across the rest of the world, apart from maybe with the US moving up. But we've been expecting rate hikes from the Bank of Japan. And they've been delayed because data's been moving a little bit left and right. But really, last couple of data hits that we've got, it does look like that inflation is just getting to a level that the bank will look to go. And the market is not fully pricing it in, but I said as about 80%. Now, what we're going to do today is we're going to look at a few of the charts and where there's going to be trading opportunities. Now, what I will do is I'll probably be less focused on the dollar yen, which is unusual, but due to the big moves that we're likely to get in the dollar, and we've already seen in some instances because of what's going on in the States, most traders are feeling that there's probably better trading opportunities on the crosses. So we're going to look at Aussie yen, Euro yen, Sterling yen, where you're probably going to get a purer trade, because when that dollar moves and it moves hard, you will get some different differentiations between some of the majors, but you're probably going to get a much purer trade if you look at the crosses now moving forward. So let's go over to our charts and just have a look at where things are setting up. And there are some really interesting setups for trading what we anticipate to get from the Bank of Japan. And as I said, first of all, we will have a look at the dollar yen, which is, as most people know, has had a really good appreciation from September 2024 to where we are around about now. And we peaked out just around 159. We're down around 156 at the moment. With the expectation that we will get that rate hike. And as I said, there is still a chance that they don't go. I think, as always with any rate decision, if we get the surprise, if they don't hike rates, that we'll probably see some intense yen selling. That could take us up to challenge those recent highs that we saw back then in January, just a few weeks ago, and that trend line resistance, which is coming in, as you can see here, around about 158. So plenty of trading opportunities if what is not expected comes through. If we do get expectation we hit expectation and there is a rate hike, one of the things we're going to be looking for is we may not see too much movement from the hike itself, but it's going to be from the message that we get from the Bank of Japan, from their statement, from their forward guidance, and then from the press conference afterwards. So that's probably, as always with most rate decisions across the central bank world, the message that we get on the back of a movement, unless that movement is a surprise, is probably going to have more impact on the market. So rate hike, we may see some yen buying, but if it's already priced in, we might get a bit of a movement down in dollar yen. As I said, the shock move is the one that will probably see the most move on the time, and it will bang it up back towards those 158, 70, 159. As promised, I've moved straight over to the Aussie yen. Always a really good indicator of risk as well, Aussie yen. It's one of the big things that moved massively in the GFC when I was unfortunately trying to trade it. Liquidity was a massive issue. Generally with Aussie yen, it's a really good risk proxy. If things are going well, stocks are moving up, risk trades are going on, Aussie yen tends to move higher. If things are looking uncertain, risk is coming off, Aussie yen tends to go back. Now, the interesting thing that we've got coming up now, and we could get interest rate differentials with this, and this is not just the Aussie yen, it'll be with the Euro yen and Sterling yen as well, is that we're now looking for that interest rate differential to come through. So Bank of Japan to be hiking rates, and we're looking for the RBA to maybe cut rates in the near future. As you can see, and this is very similar to the other crosses that we're going to look at, we're getting towards a little bit of a resistance level here. So this is once again the daily chart. So they tend to be big figures apart. We're trading around 97.70. Trend line resistance on the daily, and it's not a bad line at all. It's got 1, 2, 3 decent levels that it's hit, and we're floating around there now. traders will be looking for entry positions near this trend line resistance. So the bears will be looking to sell against it with stop losses through. The bulls looking to buy through and see a break up and to move it back up to maybe to this 150, 200-day moving average level. So a good opportunity for trades there. Once again, should be smoother. If we get the hike and if we get a hawkish Bank of Japan, and it will become down to the nuances in the rhetoric that we get and the narrative we get from the Bank of Japan members and from the statement, then we're going to be looking for yen buying, Aussie selling around here. You could sell here with the stop loss through there, and it moves back down towards, hopefully to fill in these levels all the way down to 94. So trading opportunity there. But here you go, euro yen, really good chart levels again, all the way back, long distance and a couple of touches. We're sitting here around 162, trend line resistance around big figure and a bit above. Recent highs back in January up at 164.5. Once again, if we're looking for that rate hike, we get the hike, we get hawkish BoJ. You're looking to buy yen. Euro's not a bad sell against. We can't see the ECB at the moment. European data still very, very tricky, not looking particularly great. Looking for cuts from the ECB. We know that. We've been listening to Christine Lagarde. It's a good level that maybe people will be looking to sell at. What's looking very good from this chart is, if you can see here, we've got the high from January, there we go, 7th, and the 200-day moving in average coming in around the same level as these other previous highs back in December. So a lot of traders will be looking at this level, the 200-day moving average, and the fact that it coincides with, look, 1, 2, 3, 4 highs, it will be a really strong trading level once again. And what we're looking for the fundamental point of view is, if we get the hike, if they come in hawkish, we could get the hike and then we've got to wait and see. That could be seen as a little bit more dovish. Maybe not so much of a move to the downside, and maybe we do see the yen continue to depreciate, which it has done, as we know from this trend back from early December. We're sitting in the middle of that range now. So moving on to the last cross that we're going to look at today, the sterling yen. Sterling, another situation. We've got interesting data, like data's not looking particularly great out of the UK. Sterling's getting hit a lot. Sterling's getting hit a lot against the dollar. It has come off really nicely from these levels that it hit December and January. Very similar pattern to what we saw in euro yen. We are sitting more in the middle of the range. In general, most traders looking at these technicals, and if they look at the longer term dailies, you'd probably be saying, okay, I'll probably put more of my portfolio into an Aussie yen or a euro yen trade. But sterling yen will move, and it will move very quickly when it does go. So we're sitting very much mid-range now. If we do get that rate hike and we do get more hawkish, expect to see the sterling yen move down to these support levels. They're coming in around 187.70. Initial resistance probably on this 200-day moving average, 195.36, and then good resistance levels up here, 197 sort of 50-ish, and then we've got these highs that we're looking at, 198.40, 198. If we did get a break for whatever reason through these levels, and that's probably not going to happen anytime soon, or certainly not on this BoJ, then it does open a way for a challenge back up through 200 to these levels. So plenty of trading opportunities out there. It really will come down to, first and foremost, do we get the hike that 80% of the market are expecting? That's probably a short-term buy for the yen, sell for the dollar yen, and sell for the yen crosses. Then we're looking at the indications of forward movement from the statement, which comes out at the same time as the rate decision. After that, we've got the press conference, comes out probably half an hour to an hour later. The other thing that's always very important, and it is a bane for most of us, because especially this week, it's happening on a Friday or a Friday afternoon for us here in Sydney, you don't get a guaranteed time when the Bank of Japan are going to make their decision. It generally comes out, and there's always these stats that come out. It's around about lunchtime in Tokyo. Once again, we're probably looking at yen crosses rather than the dollar yen. But dollar yen, there will be opportunities in dollar yen as well, but it's probably a higher risk. Maybe adjust your risk profile parameters, your capital management parameters, if you're going to be looking at the dollar yen as much. So good luck out there. If you need anything from us from ATFX, and please do subscribe if you haven't done yet, we'll keep you informed on what happens on the day, once it's happened, and why the moves have occurred. Thanks very much for listening. And once again, if you need anything from ATFX, please do contact us.